Well, let's get across the market open now. David Scutt joining us from StoneX. Scutty, welcome to Wednesday. Of course, all eyes now on that spat between the US and China with 104% duties due on Chinese exports to the US. That's going to take effect within a matter of hours.
Yeah, 2 p.m. in Sydney time today is when the deadline hits. And yes, it's going to be a pretty gnarly day. I think we can go beyond calling it a spat now. It's an outright trade war. And what happens today and the next couple of days is going to be very, very important in the trajectory for broader financial markets moving on this year.
All right. What are you making of market moves at the moment? Particularly, we saw what you would refer to as a dead cat bounce yesterday.
Yes, the rally yesterday, particularly in Asia into Europe, I can't help but look that a lot of people were paying more attention to what was going on with the manipulated China stock rally than actually anything going on elsewhere in financial markets. The news about the additional 50% tariffs on China was already there. We had China's Commerce Ministry going and warning that they'll fight to the end, and markets just ignored it. And of course, less than 24 hours on, now we're looking back to where we were 24 hours ago. So nothing has been resolved. The risks actually look to be amplifying right now because it's going beyond trade tensions. Now there are some serious signs of strife in financial markets. There is definite issues in the treasury market right now, and it means that the increased risk that we might have to go and see central banks, including the Federal Reserve, step in with emergency measures.
Yeah, I mean, I was speaking to a bit earlier, and you were saying essentially there's a danger that something is going to break here.
There is. There's stresses in the treasury market, fixed income markets right now. We have massive negative swap spreads. So treasuries are trading at a higher yield than other instruments, which typically would be the other way around. Now, that's something that's really alarming. That is something that you don't normally go and see. It says that market functioning is not there. And it's probably partly reflective of what's going on with the uncertainty out there already. We had a 3-year treasury note auction overnight that had weak demand. We have a 10-year auction and a 30-year treasury auction coming up over the next 2 days in an environment where you can already see that there's very much not much demand out there for treasury. So this is a really, really trying period. And you can see right now that markets are starting to go and latch on that, hey, something pretty serious is amok.
What do you make of that speculation the US could start dumping US debt?
That China could do that, you mean?
Sorry, what did I say? Yeah, China. Sorry, dump US debt. Yeah.
Yeah, look, it's out there, and we know that there's been a meaningful offer, even with the risk-off tone that we saw in riskier asset classes, stocks, and everything last night. There was no bid in longer end treasuries. It was offered again. Now, that is really unusual. People talk about the 60-40 portfolio being that balancing tool. When one goes down, the other goes up. Right now, that is not in play. And again, it goes back to market functioning. There is something amok in the treasury market. And when you're talking about the biggest and most liquid market in the world, usually, if that's happening, it's saying that something pretty dramatic is happening underneath the surface.
Scotty, it's going to be fascinating to see how central banks negotiate this, given there's still this is moving so quickly at the moment. And in fact, we've got the Reserve Bank of New Zealand today making its decision.
Yes, who'd want to be Christian Hawkesby? Certainly his first meeting as governor, or as acting governor at this point as well. And facing an environment like this, markets have a very small probability pricing that we could see a 50 today. A 25 is deemed as a lock. Who knows which way they go? But just given some of the market functioning issues we're seeing right now, and when you look at where the cash rate in New Zealand sits, 3.75%, it's still arguably in pretty restricted territory. So you cannot go and rule out the risk that they could go with a larger move. Now, I see it as a bit of a canary in the coal mine because if it goes big, it's going to increase that we're going to see the risk of other central banks move aggressively to try and ward off whatever's coming down the pipeline. So pay really close attention. The meeting itself, the decision will come out at 12 p.m. Australian Eastern Standard Time.
What's your view on the Australian economy at the moment, Scuddy, and the threat of potential recession, particularly given obviously what we're likely to see in China? Do you see that risk as being possible?
Well, look, it's definitely possible right now. Certainly it depends on what the policy response is from China. Will they go and stimulate? Will they stimulate through the traditional measures they're trying to do, more infrastructure spending and the like? Well, that's typically what we're seeing, but no one knows. That would generally be at least a neutral offsetting factor for us locally. But we know that we're still much a consumption-driven economy. and confidence. And we saw consumer confidence yesterday start to go and tank it, especially after the tariff announcements were made late last week. So if we stop spending, if we start scribbling away our savings and the like, that is going to go and increase the risk we see, something along those lines. But at the moment, there's nothing to go and say that the economy is falling into recession or is entering recession right now. But the longer this persists, the longer the uncertainty remains, the greater the risk we will see a downturn.
And so as a proxy for the Chinese economy, we've seen the Aussie dollar smashed. Where are you seeing that tracking from here?
Yeah, just looking at it now, it's just when it hit fresh cycle lows. It's beneath around about 59.50 at this point in time. The Aussie for me, especially if you're an investor, whether you're a trader or longer term investor, is a really, really good proxy. Now, I can tell you why. Over my career, which now spans back about 25 years in financial markets, it has been an excellent guide as to where we're likely to go and see other riskier assets go and move in time. It tends to go and lead other markets. And right now, we haven't got any signal. That's having a quick look at it there. You can see a big inverse hammer printed overnight. So we saw that rally in Asia yesterday, and it's come all the way back. The bears are still well and truly in control. If we take out the lows meaningfully that we saw hit earlier this week, we're going to see a big push. There's going to be a lot of emphasis potentially to go and try and retest the lows that we saw during the pandemic around about 55.10. If we don't see a meaningful bid coming through or some change of tack from Donald Trump, the risk of that is growing exponentially right now.
And what are we seeing with the Chinese yuan?
Well, that's where the really big epicenter is today. And I wrote an opinion piece for the newsletter there at Ausbiz yesterday, just flagging this risk. And right now, you can see the offshore yuan has gone and hit the weakest level since the dollar on record. Now, that's a pretty big move because Chinese policymakers have been maneuvering both in offshore and onshore markets to go and support the yuan. Right now, they've stepped back and market forces want to go and absolutely obliterate this thing higher. If that happens today, the PBO steps back with their fix and lets the offshore or the onshore yuan go and weaken along with that quite dramatically, we're going to have a major risk off episode. It's not me trying to be alarmist. This is the risk we're dealing with right now.
Overall, Scuddy, I mean, should we be surprised with what we're hearing from the Trump administration? Obviously, also signs perhaps of some cracks within the inner circle with Elon Musk and Navarro having a go at each other. But moreover, the response from China. Did Trump think that China was simply going to acquiesce?
Well, I don't think it was ever going to bend the knee, and I think that's pretty obvious right now. It's just some of the commentary that came out from the Commerce Ministry yesterday was almost like warlike when it comes to the trade side of the equation, at least. I don't think there's going to be a back down, and just the 50% on top of the already high tariff rates that were put in place. It's meaningless. It's already going to make trade between the two largest economies in the world redundant. So it's pretty much, it's an act of economic vandalism from the United States. And then now, how's China going to respond? Well, up until this point, they've been trying to go and keep at least the currency stable. The question today is what are they going to do? If they don't choose to go and do that, if they choose to go and fight back and weaponize the UN, I can promise you it's going to be a very, very ugly day in Asia.